Welcome to a new episode of PE Forum. Today we have an exclusive interview with Christopher Merrill. He is the co-founder and global CEO of Harrison Street Asset Management, a leading investment firm specializing in real estate, infrastructure, and credit strategies across North America and Europe. Under his leadership, Harrison Street has grown to manage over $100 billion and offers a range of institutional and private wealth solutions. Merrill's achievements go beyond real estate and finance, as he also serves on multiple industry and nonprofit boards, reflecting his broad influence and commitment to both business and the community. In this interview, we explore Harrison Street's strategy and growth, the outlook for alternative real assets in today's markets, and Christopher Merrill's journey and insight from his extensive experience. Christopher, thank you so much for joining us today.
Thanks for having me.
I want to start with, the fact that Harrison Street has recently surpassed the $100 billion in assets under management. And I wanted to dig in with you and see what were the key strategy, in your opinion, that have driven this growth.
For sure. Well, again, thanks for having me. It's an honor to be with you. Really for us, it's quite simple. I think what's driven our growth, and I think what's driven the success we've had, really comes down to the people and the products. I think the product offering that we've been able to amass across the platform, across equity, credit, infrastructure, we've always had a level of innovation. We've always truly tried to differentiate our products. We've really wanted to be a value add to our investor base. So again, in an asset class that is very much a commodity, innovation is not easy. And so we've really worked hard over the past 20 years, almost 2 decades, to really create innovative, differentiated products, quite resilient, quite consistent. We've been through many cycles. So really products has really enabled our growth. And at the same time, it's the people, it's the domain expertise. We've got an unbelievable group of talented individuals across this platform that have been around the ecosystem for quite some time. And their depth of knowledge is really driving the overall success. Add to that, we've worked hard to create a culture. We've created a culture of transparency, a culture of communication, a culture that really thinks about how can we take lessons learned and make us better investors. And so I think when you take the people, the products, the culture, that's really gotten us to where we are today. And we're so thankful and humbled by the support we've had from investors all over the world.
And we've seemed to notice that there's a convergence, I would say, or blurring of the lines between private equity and private wealth. And you launched the Harrison Street Private Wealth. So how does that fit within your long-term vision and strategy?
Yeah, no, it's interesting. We've got a global client base, very much institutional in nature. But over the years, we've begun to reach out to more of the high net worth retail channels. We're seeing a growing demand from individuals, registered investment advisors, trying to access products that institutions have been able to access. So why shouldn't the individual have the same access to alternative products that institutions have? For us, our products fit very well within the retail channel, given the strategies, given the way we think about demographic investing. Those fit really well into the private wealth channels. So for us, it's a growing market. It's probably a market that's anywhere from 2 to 4 trillion in size when you think about the access to products. But it is a market that requires an ecosystem. It requires what I would say is investment in your sales team, in your people, in your processes. And so for us, by launching a new area, it allows us to continue to focus on our very important institutional clients and not take anything away from that, but now establish a new, if you like, client service team that can focus on that effort. So we didn't want to go into the private wealth space if it was going to take away from what we could offer and how we could service our institutional clients. So adding this capability now allows us to offer that complementary service to our high net worth clients.
And do you see that within, the high net worth client community and the single family offices, there's a growing understanding and growing way of seeing things throughout generations? And how does that impact, the way you invest and the way you deal with them?
Yeah, for sure. I mean, I think, what we're seeing with the individuals and in the family offices, really how they're thinking about asset allocation and thinking about where real estate and or infrastructure might play a role within their portfolio. Concerns about inflation, concerns about where things might be in the broader equity markets. So we are seeing an increase in allocations toward real estate and infrastructure. So they are going to play a bigger role in the individual's portfolio. Then it's on us to now offer interesting products and differentiated products, and whether it might be evergreen type strategies that focus on income or more higher yielding opportunities that are more in a closed-end fund wrapper. So what we've tried to do is create really different products across the risk-adjusted spectrum from evergreen to opportunistic strategies. Again, at the same time offering different geographies to invest in, whether it might be the US, Canada, Europe, but really trying to think about ways to offer innovative solutions to that client base. And that's really what we focused on. If we can bring equity, credit, infrastructure into that channel, we see, again, the opportunity. Why shouldn't that individual have the same access to a product that institutional investors have access to?
And in your growth of Harrison Street, you've recently done the integration of Colliers Investment Management Division. How does such a deal come along, and what capabilities you see that can combine help you grow even better or service your clients better?
Yeah, I mean, I think the formation of Harrison Street Asset Management really has come about as we've thought through how can we expand product and capabilities to our global client base. What we're seeing is many investors want fewer managers. And so really the focus is on how can you do more with less? How can we bring more products, capabilities to our client base? And so for us, we have an investment, a major shareholder in our business is Colliers. Colliers had investments in some other businesses. And for us, it made tremendous sense to work and bring those affiliates together under one umbrella so that we could offer very synergistic products across equity, credit, infrastructure, very clean and common distribution to our institutional investors and to our private wealth channels. So the focus was coming together as a 1 and 1 can be 4 or 5, because again, that scale allows you to invest in the business, invest in people, invest in resources, invest in data analytics. And that really then can become your edge as a business. How can we use that scale to generate better performance? How can we do it to help access investment opportunities, strengthen relationships with lenders, access to data, enhancements in research? So again, that scale, that coming together really allows you to invest in the business and play the long game.
You said something about, fewer managers. Is there sort of a race of the bigger the better, and or is it a way of survival? Some are saying that private equity needs to grow in terms of strategy and sort of offer one-stop shop to institutional and families. Do you feel that as well?
There is a major consolidation underway. There's no doubt about it. Scale certainly allows you to invest in the business. I think these are expensive businesses to run. And, one of the greatest assets we have is our people, human capital, investing in human capital. People want not just better economics, but people want growth opportunities. They want to be challenged intellectually. So as a firm, to attract the best talent, you need to have a firm that can offer a diverse set of opportunities to your employees. And that requires you to have some level of scale. So it is very important in the race for people to have a firm that is growing and offers differentiated concepts to, to the talent. So that's number one. Number two, you are seeing many investors saying, look at once I get comfortable and I've done my operational due diligence and I know how you think as a firm, I know we're aligned, I know how you think about risk management, it is easier for me to think about allocating more capital. And so again, you can be a better resource to these clients if you can offer them exposure to income, opportunistic, equity, debt, infrastructure, US, Europe. But it's really on you to show that you can manage a company with complexity, that you can build a business with complexity, that you can have dedicated teams, that you can create that alignment of interest. And that's really the crossroad we faced at Harrison Street was be consolidated or add products and capabilities to the platform so you can keep that culture, still be that entrepreneurial firm, even though you have scale. And so that's that crossroad that we faced. And we're very fortunate that we were able to add those capabilities to our firm so that we weren't swallowed up, but rather we are now able to compete with those firms and offer unique products and really do it in a way that has that level of innovation and still thinks about that strong culture and that entrepreneurial spirit. And so we've been very fortunate.
Do you see a target AUM that is needed uh, through a timeline in order to be able to continue doing that, or do you feel that you've reached a level that is acceptable and you can move forward?
To me, it's not necessarily an AUM target. It is, can you offer a diverse set of products? So, some firms will do things differently. Some will just raise very large products. The way I think we're going to grow Harrison Street is through, funds that really offer ability in clients to focus on different regions, different markets, different opportunities. So for us, it's not necessarily an AUM target as much of it is where is that white space? Where can we differentiate? Where can we offer a competing product? But the ability for us really to offer equity, credit, infrastructure, do it in, like I said, evergreen income products and more closed-end value-added fund. That's really, I think, given us the ability to enhance and be a more strategic long-term partner to our institutional partners. But there is still white space out there that we're still exploring new areas to grow. So again, growth for us is not an AUM target. It's a concept. Can we continue to innovate in products? Because if we can't offer innovation in products, we're not going to launch it and we're not going to enter that area.
And you're definitely doing something right. Also, within the industry, you've won a lot of awards and accolades, whether Harrison Street or yourself. In your opinion, if there's, a single innovation or strategy that contributed to this recognition, which would you pinpoint?
It's tough to say. We've always tried to push ourselves to be a first mover in whatever we do. And I think innovation in the real asset space is difficult. You don't see a lot of innovation. It's a commodity product. Many people are, I would say, copycats are doing the same thing over and over that others are doing. So for us, we've been a first mover. We were a first mover jumping into the alternative segments 20 years ago, investing in student housing and senior housing and medical office properties and self-storage, where we were a pure play in that sector, where many had just dabbled before. So offering a dedicated property around that. We were the first to launch an evergreen vehicle around alternatives. We've expanded those strategies into other geographies. So I think what's really helped our growth and that recognition, it's pushing to be a first mover and to go to places that others aren't. And really, when you think about innovation, if you're not inventing the new, it's not innovation. So for us, it's that constant push on product innovation, process innovation, people innovation, and we're going to continue to try and bring that to the real asset space, which is not easy to do. But I think that's where I think the industry has recognized our firm is by really thinking that way over the past few decades.
And so you started opening the topic, and if we continue on, the more of the focus of real estate landscape,
Yeah.
we're noticing a bit of a slowing down on the inflation. Interest rates are coming down. what sectors in real estate are you most excited about today?
You know, we're such big um, believers in demographics, not trying to time markets, but looking at what's happening with the drive for education, the need for housing, whether that's off-campus housing or on-campus housing. So for us, education is a big theme. When you think about healthcare, the aging population, people living longer, the need for health and memory care, very hard to take care of a loved one at the home. The move towards more outpatient setting, technology advancements are moving things away from the hospital to outpatient to medical office. The digitalization of our economy and the drive for data centers. So for us, it's that demographic push that has really bode well for us. That is to us, a very resilient strategy. Um, it's harder. The asset classes can be more fragmented. You have to build a bigger organization. You have to roll up your sleeves. That's what we've been doing for 2 decades. So things around those areas are ones that we're very excited about, in the coming decades. And the beauty is demographics are a global theme. So it's not just here in the US. It's whether it's in Canada or in Europe or other places. That's what's so exciting for us is we can build a global business around these resilient asset classes.
And so beyond the demographic trends that that you follow very well and you see as a good way of growing, are there any macro or shifts that you notice within the economy that you believe are a big opportunity?
Well, yeah, I mean, I think a lot of what I was just saying were those, that's those macro shifts. I mean, again, people living longer, that aging population is really putting strain on what that infrastructure will be. And we have such a shortage of supply right now in senior care. And we're going to wake up in 5, 6, 7 years and really have an issue of where are we going to house, how are we going to take care of loved ones that have these health and memory issues. The investment that is being made in life-saving drugs, pain management, that's really going to drive the life science sector long term. So while certain sectors like life science may have some challenges now, there is going to be a huge demand and need for those type of facilities going forward. What's happening with university, the demand for higher education, the demand for education as it relates to, the what I would say is the compensation for someone who comes out with a college degree versus a high school degree. You're seeing a huge push, but at the same time, the universities just don't have the capital and the money needed for their infrastructure. The amount of deferred maintenance on these campuses is tremendous. So working, whether it's off campus housing or whether it's working with the universities on public to private partnerships, there is such a need for that. So again, those are the big macro themes at play. So whether you're seeing inflation, you're seeing, volatility in interest rates, these are themes that will drive demand for real estate and real assets going forward. What's happening in the digitalization of the economy, the need for data centers and other type of infrastructures, dark fiber, et cetera. So those are the macro themes that we love to focus on. And again, while many might see that, do you have the infrastructure? Do you have the experience, to really access and manage those opportunities? And that's really what we've tried to build over the past 2 decades.
Going on the digital infrastructure and the need for data centers, we've heard some crazy, or maybe not crazy, but some interesting
Yeah.
announcement around investing for data centers
Yeah.
with for AI. Is it becoming an expensive play? And
Yeah.
is there a risk of, despite the difficulty of doing, of oversupply, in your opinion?
It's a challenging one. And I think with all of these asset classes, whether it's office, multifamily, data centers, student housing, there's ways to invest in these sectors. We choose to focus on what I would call as more powered shell, more triple net lease to high credit tenants that need space in really strong, resilient markets around the country. We really are not investing in sort of the AI thematic approach. You're seeing very large centers being built in markets where if that tenant or something happens, what is the reuse of that facility is challenging. We're also seeing a lot of people getting involved in the sector by buying land that might not have access to power, because power is really what's going to drive this going forward. It's the power issue and access to power, where people are getting involved in projects that might not get power for 7, 8, 9, 10 years, if ever. So where we're playing is we've sort of picked a specialized area of the market to focus on more of these hyperscalers, high quality tenant properties that have access to power, where really it becomes almost like a triple net lease business for us. But yes, I think you're going to see some challenges in the space, and you're already seeing it. You're already seeing folks that are overpaying for industrial land that hope they can get power. You're seeing people put a lot of capital into AI centers in tertiary markets that might do fine, but long term, there's probably outweighed risk versus the return they can generate. So it's absolutely something to watch for sure.
And on the general view of the real estate asset class, what macroeconomic factor you see or geopolitical event could present a large risk? We've seen the opportunities with you. Where do, in your opinion, the big risks stand? And there's a growing theme around investing in Europe. Europe has gained recently a new attractive way among investors. For you, that is have investment in North America and in Europe.
Yeah.
Where do you see the biggest opportunities today?
I think some of the opportunities we see in Europe, revolve around the debt landscape. Debt is very difficult from the commercial banking standpoint. So we are very focused and bullish on, providing debt financing throughout, the UK and continental Europe. We like the living sectors. We like the purpose-built student housing sector. We like the living sectors. For us, we're looking even into some of the luxury hotel market, where there's great demand in Europe for luxury hotels. And so for us, it's trying to be very thematic and trying to look where we think, having been there for a long time now, where the opportunities that we can see, trying to create more vertical integration in our platform. But again, the demand for education, the demand and need for living, the aging population, global themes. And so that's really where we're focusing our efforts right now in Europe.
Are you thinking of other geographies? Is the GCC on your map as well?
Sure. Yeah. For us, we've been very active, like you said, the US, Canada, Europe from an investment standpoint. We've also opened offices in Tokyo, in Seoul, in the Middle East. Those are markets where we have many clients that are investing in North America and Europe with us, but we are exploring sort of investing back in those regions. How can we give back in those parts of the world? And so we are exploring it. So again, like I said, what's exciting is education, healthcare, data. These are themes that are global. And so we are exploring how can we create investment products in those regions where, we've had great success and great relationships. So it is on the radar screen. It is white space for us. And, we want to think about it and do it in a thoughtful way.
And if we look at how do you mitigate your strategy in terms of, the economic climate, you mentioned the Russian-Ukraine situation. Does that, worry some investors, for example, in the US that are starting to deploy in Europe?
I think, I think investors are worried generally across the spectrum, right? Whether it's US trade policy, whether it's interest rates, whether it's inflation, the printing of money, how are these going to affect any investment program? That's where we try and take an approach of diversification, not putting everything into one asset class, not putting everything behind one partner, building a diversified platform where we've taken the cycles of learning over 2 decades to enhance, if you like, our stock picking. What universities do we want to invest with? What markets do we want to be in? What level of care do we want to offer? So it's really about building the right diversified product that can withstand shocks. Again, can it withstand key man risk? There's many firms out there that work with one local partner. We like to work with many. We like to build a lot of capabilities in-house where if we need to step into situations, we can take over. So again, it's really thinking about risk and risk management, and the scale that we're creating allows us to do that and invest in the people, the resources, the data to help manage external shocks or black swan events. And that's why I think we're here and we're upright today because we've been able to do that. And like I said, we've been through many cycles, and continuing to focus on that really will allow us, I think, to be successful for the next, 10, 20 years.
When you select, let's say, a potential acquisition, how much does the pricing and buying at the right price or buying cheap, let's say, play into game, or is it more of the model that you can build on the long term?
I think every individual investment is different. I mean, I think, if we have long-term income products that, we want to find great assets that are very resilient that, we want to own for a long period of time. Then there are opportunities to come into situations where there is some level of distress. And it might be that the unit mix is incorrect. It might be that the operating partner didn't have the type of experience. We could bring capital in. It might be they took on too much leverage, so we can come in and pay down debt. So I think certainly the basis of any investment is very, very important. And then it's what you can do with that investment. So certainly basis is very important. We need to come in at the right basis. But the beauty is whatever our program might be, in a lot of ways, we can come in with great expertise and invest in that product. And in a way, a lot of our investments also, given the fragmented nature of it, a lot of value is created just by the scale. So in a lot of ways, by willing to do and roll up our sleeves and do one-off investments or developments, the portfolio that you can create adds tremendous value. So a lot of firms are very excited about accessing alternatives. They want to get exposure to student, or they want to get exposure to senior or self-storage, and they don't have the infrastructure to go access it on a deal-by-deal basis. So we've been able to be very successful in selling to those larger groups. And so that's where you get the value, not just on the one-off investment and let's fix up this asset, let's really reposition it, but then you get the added benefit by creating the portfolio premium.
Do you feel that there is a problem with the level of debt globally within the economy and also within the real estate today, or is it well managed?
It depends. I think in some instances, yes. I think there are situations where there is over leverage. I mean, you saw interest rates move pretty quickly against people, and so I think there is a lot of situations where you're seeing not just the higher rates affecting the coverage, but then a lot of asset classes or mismanagement where occupancies have dropped has pushed situations where lenders are starting to take back assets, and there is ability for many groups need to pay down their debt. So yes, I think there is an opportunity to work with lenders, work with banks in situations where you can bring patient capital and you can come in and really buy into those assets and really bring I'd say, like I said, a long-term solution to those opportunities.
If you were, we talked about the convergence between wealth management and also private equity.
Yeah.
If you were to advise today on the spot a family office to invest within, your different strategy, would there be a ideal breakdown that you would give them, for allocating a certain percentage to digital infrastructure, to student housing, and to senior living? What would be let's say, the sweet spot?
It's interesting, and we advise many families, and a lot of it is understanding what their portfolio looks like today. Do they want real estate infrastructure to play more of a fixed income type of strategy in their portfolio, or are they looking for more of an alpha generation out of real estate and infrastructure? So it's very important to get to that right away, because if they're looking for more of an income, they want more of a fixed income. There's many evergreen strategies that we would put in front of them, both in the U.S. and Europe, that focus around demographics. Our strategies can provide that income to them. if there are individuals that are looking for more higher return, they're looking for more alpha generation, we have some closed-end strategies that we would put in front of them that we think would be able to complement what they're doing. So that's the beauty of the platform, is that with equity, with credit, with infrastructure, both income funds and more value opportunistic funds, we can sit down with a family and craft a program. And it's really important to sit and listen and understand what they have within their portfolio today so that you can build around that. And really that's what we're finding is we're spending most of our time doing that.
Interesting. And if we move on a little bit, to your own journey, your own career, uh, it's a question I ask often is like, what prompted you to co-found Harrison Street? Was it a moment or was it something that was building up?
It's interesting. I look back at, a lot of luck in the creation of these businesses. And, in my mid-20s, I was working with a pension fund advisory firm called Heitman, and they gave me the opportunity to move to Europe. And I was their first employee outside the US and stumbled upon this opportunity to invest in Central Europe in the mid to late 90s. The wall had come down. There was this push for goods and people wanted access to consumer goods, and that drove, well, you needed law firms and marketing firms, but there was no commercial space. And so this concept was, well, why not invest in real estate in markets that were sort of already part of NATO, like Poland, Hungary, Czech Republic, and build a real estate business. And pretty naive, my late 20s, I came up with this thesis and really created the first fund around Central European real estate. It was a dedicated fund, and didn't realize what I had stumbled into, but it was a great opportunity. And so where people had been dabbling in Central Europe, I offered a pure play strategy around Central European markets, and it grew and it did very well. When I came back to the States, I really wanted to kind of replicate that level of innovation. And to me, what was exciting was to innovate, like I said, in a commodity type industry. What was fun to me is build a culture, treat people a certain way, create that alignment of interest. So I was very fortunate that I had a mentor, and a gentleman by the name of Chris Galvin, who was the former chairman and CEO of Motorola. And his family had the majority of their net worth in Motorola stock. He was leaving the business, setting up a family office, and I kind of put together this idea of demographic real estate. Let's be a pure play investor. And I was, again, very lucky and humbled that he gave me the capital to start the business. And I had been a first-time fund before. I'd been through the consultant colonoscopies. So to me, it was, okay, let's build the team. Let's build our policies and procedures. Let's put a very robust offering out there if we're going to start the business. And so that's where the name Harrison Street comes from. Motorola started on Harrison Street in Chicago. So there's always been this level of innovation instilled in me by Chris Galvin, who is just a wonderful man and really helped me sort of launch the business. And so that's kind of how we got started. And, here we are today.
You mentioned luck a lot. You believe in pure luck, or do you believe that your work makes you luckier?
I think you've got to put yourself in the right place, I guess, to benefit from that luck. And I feel like that's been a lot of it. Certainly I've worked hard and I've had a lot of people around me that are very hard workers. I've had a lot of people that have supported me over the years. A lot of people have put a lot of faith and trust in this platform. So I think it's putting yourself in that situation. And I think it's, how you carry yourself with the level of humility, integrity. How do you work? How hard do you work? How are you thinking about, innovation and thinking differently? So for me, again, I always say lucky because there's people that I came across in my life that, really were game changers. And for me, that's a big focus now. How can I do the same for other people in our organization? How can I give other people opportunities? The firm I mentioned, Heitman, had given me an opportunity to be an intern for many summers. That was life changing. And so how can we offer great internships to our people? So It's just this, again, I always say luck, but I guess in a way you're right. It's sort of you got to put yourself out there to benefit from that luck.
How has your, leadership style changed from, the early days at Harrison Street and the early support that you got as you grew and you started dealing with more institutional investors? Is the leadership style the same, or did it have to evolve over time?
We've always dealt with large institutional investors, even since the beginning. And I think, when you start the business, you're doing everything. You're doing everything within the business. You're making the coffee every morning. You're doing everything. Um, I think it's even from the beginning, thinking of a mindset of how do you build talent and how do you delegate and how do you create an environment where you're giving good people the ability to run. And so I've always tried to create if you like, an entrepreneurial culture, a transparent culture, uh, build the roadmap, create the policies and procedures, create the roadmap, but then let people within that run. And people gave me great opportunities when I was a young man. So for me, it's really how do you empower people? And that's really what I mean, the thing that's where I'm having the most fun right now. It's just seeing the people in the organization grow and flourish. And we'll have a great person that's working in our Chicago office and we'll move them to our Tokyo office and they'll flourish, or we'll move someone in one area to another area. And that to me gives me such satisfaction. And that's something that, Chris Galvin taught me. I think he learned from his father who built Motorola that one of the best things that you can do in society is create jobs and to create opportunities for people. And whether we're creating jobs within Harrison Street or the way we're investing is helping universities and helping hospitals, that's been so rewarding.
It's interesting because you're usually when you talk to people that are in real estate, they talk about the assets, and you're talking a lot about the people. But I want to go back to the assets, and I want to know if, throughout your career, you see one particular deal or one particular transaction that really was, the validation or what confirmed everything that you had in for, I mean, post
Yeah.
your Central European fund.
I'd say there were things that happened before I started Harrison Street investing where I'd say that have really shaped it. I think there was investments where, there was too much leverage and mezzanine debt. There was recourse. There was situations where you had bad operating partners. So a lot of those, I'd say more of the mistakes have shaped my view on risk management going forward. This firm, we don't take recourse. We use operating partners in a lot of cases to offload cost overrun risk. We manage how much leverage. We don't use mezzanine financing in a lot of cases. So there are things and mistakes that happened in my prior life that have certainly shaped how I think about the business. So whereas, maybe people would be up for saying, oh, this deal where I made this IRR and that IRR, to me, it's more of the mistakes that I've seen, the leadership mistakes I've seen, how people treat people, how people create alignment of interest. So all those things, I think, in a way, when I look back, they were tough times going through it. But what I try and tell young people right now is that's really your value. When you go through those, what you don't realize, it's tough as you're going through it, but that's the value you're going to bring to your career is those cycles of learning.
You've mentioned, internships. You've mentioned, people moving from geographies to grow within your business. But how do you identify, the talent? What ways do you have, to really dig in and see how you can support and help the next generation of
Yeah.
investors within Harrison Street?
I mean, I think we simply we're very big believers in internships. And we'll probably do anywhere from 20 to 30 internships a summer. And we try and we try and reach out to many universities. We try and build as diversified a group, a network as we can. And then we bring them in and we give them exposure, we give them projects. And I think you can see, again, as much as we're trying to give them exposure to real estate and infrastructure, at the same time, we're also seeing how do they operate. And, that's been a great process for us. And so for us, by doing that, that's allowed us to really build some talent. We've got some very young folks here that, were number 2 or 3 in the firm, and now they're CIOs in different areas. And so we've seen a lot of great growth. So I think it's that, we've done a lot of investing with programs like Girls Who Invest, and we spend a lot of time on the personal side. I spend a lot of time with scholarships and with how can we give people exposure to an education. So it's not just, the first step is get that scholarship so you can get the education. Then it's, okay, now how can we help open doors with internships, and whether it's with our firm or others. But that's something that, I'm a big believer in, is how can you help those young people get their foot in the door and get exposure to that work environment.
I want to continue on that because I know you serve on, multiple nonprofit boards, and I want to understand, what prompted you to choose these organizations and what motivated these choices.
Yeah, I think for me, it's very thematic. Education, healthcare is very important to me. So how can we support either universities that have helped me, helped my children? How can we help create scholarships for folks that, really can't have access? The cost of education is not cheap. And so how can we help people? How can we help society increase, that educated labor force? So for me, it's focusing on education. It's focusing on not just the scholarship portion of it, but then, okay, now how can you help people get their foot in the door? Because it is very difficult. It's very competitive. It's challenging. And so to me, that access, there is such a great network of business owners and business leaders that all had their start because someone helped make a phone call. And so what you'd be surprised is, or not surprised, is when I go to folks and say, hey, would you open up 2 or 3 internship spots for some folks? How many people are willing to do that? So that's a big focus of mine. How can we get more people get their foot in the door? And then on the healthcare side, it's obviously we've got an aging population. I've had, unfortunately, some challenges in my family and with my mother with a lot of healthcare issues. And so for me, it's how can we give back? How can we not just provide, wonderful, safe places for people to age, but how can we also invest in life-saving drugs and pain management? So I'm involved with hospital systems, and so I think it's those sorts of things. It's just like I said, I feel so fortunate to be in the situation I'm in. So how can you kind of give back and sort of add to society? So for me, I'm lucky that we've got this Harrison Street asset management ecosystem. We can give back by providing jobs. We can give back by providing internships. We can use this to support healthcare, education, missions. And that's something that I think this ecosystem, and I know that our team love to do.
You mentioned this ecosystem. Do you see it playing a role in helping shape maybe how the future of alternative real assets is set up? Let's face it, private equity, especially in certain sectors, gets a lot of bad press.
Yeah.
Do you see that what you're doing helps change this? And what do you aspire for in the future?
I hope so. I hope so, because I do think, what I enjoy doing is connecting the dots for all of our employees on, look, at the end of the day, what are we doing? We're investing capital for people that have worked their whole life, whether it's fire, police, teachers. We're investing people's retirement accounts that have worked their whole life. So it is a mission that is very important, and we can't take that lightly. Number one. Number two is, how are we investing? Well, we're doing things by investing in infrastructure that's important to society. We're providing capital to help medical research. We're providing capital for housing for students, safe, well-lit places to live. We're providing, capital for seniors to age in place. So a lot of what we're doing is providing infrastructure that is taking care of many people. And so I think it's very important to connect those dots, because I think that creates the passion, that creates the alignment. when people wake up every day, that's what we're doing. And so I do help because I think you're right. I think in some ways, you know, real estate can get a bad name and things, you know, when you read about the office sector and you look at how some people are investing in the retail markets. And so for us, it's how can you connect the dots that, you know, not only is this an asset class that is rewarding, but it's an asset class where you can make money, you can create resilient cash flow, you can provide great income returns. Um, and you know, again, it's needed because when you think of the next 10 to 20 years and you think of the aging population, you think of that deferred maintenance at universities, there is a need for public to private partnerships. There is a need and a role for us to play in these asset classes going forward.
Christopher, you were very generous with your time today. I just want to close with the question around, the hot topic. We mentioned it a little bit, which is AI. But I've talked to several investors, and many of them are saying that, AI will play a huge role in selecting investment and making investment decisions. One of them even said, we're the last of the Mohicans. We won't be needed anymore. How do you see AI impacting really on the long term, the investment business and the decision making, basically?
Yeah, no, it's a great question, and you know we've got an AI committee undertaking a lot of these thought processes, and how can you become a thought leader in this space? And you know certainly the simple thing is all the efficiency tools, right? That's a simple thing, and so we're using AI in many ways to create more efficiencies across the firm. The exciting thing about AI is what I believe is in investing, there is so much that is in when I look at my investment committee within their heads. You know, you've got 150 years of experience, you've got thousands of deals that we've all been through, the good, the bad, what worked, what didn't work. How do you get that out? How do you go through and take all of those cycles of learnings that those scars that we all have and put that in a place where you can sort of almost collate it in a way so that you've got a member of your investment committee that you can ask questions and get feedback. So I certainly don't think we're going to be disintermediated out by AI because, again, in the real estate space and the infrastructure space, there's so many nuances to investing. There's so many things that happen related to people, relationships that are very nuanced. But I do think it can support. I think it behooves us to include it in our analysis. It includes us as a data analytical tool. So I do think it is important. And that's where you need scale from a platform because to invest in AI and do it the right way, it's expensive. And so we're putting a lot of money behind that right now. And that's why it's important as an investment management firm to have some level of scale. And that allows you to sort of differentiate yourself in the industry. And that is a challenge. That is a challenge for smaller managers now is how can they compete and how can they differentiate if you don't have that scale? So it's certainly exciting times with it. And I've been having a lot of fun learning more and more about it. And, you know, we've got a great committee on top of it. But I do think, you know, having it supplement your investment decisions is what we're going to see going forward.
Christopher, thank you so much for your time. It was really appreciated.
No, it was great to spend time with you. Thanks so much for having me.